What's up, everybody? Kim Foose here with FooseAlerts.com. It's November 16th, 2012. Just want to do a little bit of a trade review on THLD. It was a stock pick that I tried to trade yesterday, and turns out it was a failed F pattern breakout. So I took a very quick loss and saved myself and anybody else that was in the trade with me, from a much greater loss, because I was able to identify when an F pattern could be a failed breakout. F patterns can quickly reverse if they don't actually break out to the upside. And we can also look at the general market to see a signal that could be just a whole market sell-off, which is going to influence the breakout as well. And then we'll look at another one that actually did work out, which was pretty much the same exact pattern. A lot of times these patterns aren't going to work. If you look at my win ratio, I'm only at about 55% win ratio, so I lose a lot. But when I do lose, my losses are very small, and I let my winners run a bit more, hopefully, when they make those runs. So my wins definitely far outweigh my gains. My portfolio is at all-time highs right now. And it's always portfolio management. It doesn't matter if you take a lot of losses, as long as you keep them extremely small, and actually do pick some winners in addition to that. So looking at THLD here, this is an F pattern breakout. We did have news. What I was looking at here, this kind of revival pattern, not necessarily a revival on the daily chart. There's no three-phase breakout chart pattern here, but it was attempting to break out back above the 13 EMA for the first time in about 2 months. So it could have been a potential trend reversal, and it did have news yesterday. So there was two different catalysts there. One, the trend reversal over the 13 EMA on the daily chart. Two, we had that news about some kind of there was some kind of drug phase 2 news out, which was causing momentum for the stock, and it gapped open about 7%. And catalyst 3 was a potential F pattern break that I actually bought into. So at first, you can obviously see the first open, the gap open from about 398, tapping into 430 very quickly there. On THLD, we're looking at the 2-minute chart. Then it just kind of formed up this little F pattern here. As soon as that high a day breaks, that's an F pattern breakout. I got long at 431 here. Looking like we're going to actually break out of this F pattern, potentially, rip up above the 13 EMA right there as well, which is indicated by this yellow trend line. From there, we spiked. We got the volume confirmation. We hit the 440, so up a quick 10-cent pop there, and with volume in as well. But from there, with F patterns, if it breaks back down below that trigger neckline, that's your first indication of, maybe this is a false breakout. It's a bull trap, and the stock might reverse and could, gain a bunch of short sellers, and also people that were long, thinking, hey, this isn't actually going to work out. I need to exit this price, or exit this position, and cut my loss. In addition, the second level of knowing this is a trend reversal if it breaks down to 13 EMA. So from here, I was long at 431. This quickly broke down. I actually sold at 428 right here as soon as we broke down that neckline. A lot of times with F patterns too, it might just come back down and retest this support level, and it could be another potential buy opportunity. And it just continues to rip from there, and it maybe retest this level, and then the 13 EMA catches up, and then it finally continues to trend. But there is always that indication there of the market sell out, or the stock to sell off there once it fails that breakout. So I didn't want to risk it, and I took a very quick loss here on THW because it did break back down below that neckline of this F pattern breakout. So it was a failed breakout. From there, it finally broke down here with huge volume in, broke down the 13 EMA, and from there, it just kind of trended down for the rest of the day, and got a little bit of momentum again. Looks like it's actually gapping open again this morning on THLD, but as you can see how quickly it dropped as soon as that F pattern broke. But we'll also look at the market here to kind of look and see what happened as well. You can see the market, was just kind of chopping all over the place yesterday. It didn't really have any kind of momentum. We did drop down 28 points, but coming out of the gates here, this was kind of an F pattern break on the Dow. This was the opening price. We were kind of even, and then we broke out above this flag pattern here, looking at the Dow Jones chart here. So there, that looked like the market was going to squeeze here. We had been selling off quite significantly. Looked like we were potentially going to break out here, and the market did actually break out here, and then quickly broke back down below that F pattern. Also went back to red. So the whole market basically mimicked exactly what THLD did as well. So you have to be able to watch what's going on with the market as well, because it definitely gives you indicators of what your stocks will be doing. If the market would have continued to rip to the upside after it went red to green and broke out right here, that could have been a whole different story for THLD and might have continued to rip it up. But in this case, it didn't. And it's chopped all over the place yesterday. So yesterday was a tough day because there wasn't any really directional movement in the market. But another one, the previous day, which is pretty much the same exact pattern that actually did work out, was PLX. So this is just an illustration of one that did work here, which was pretty much a stock that had been, coming back down in a downtrend. It did break the 13 EMA right here. And then we'll look at the F pattern back here. See if they'll let us go back this far. So same exact pattern that I tried to buy into on THLD, just this one actually worked out. So looking here, we had that first pop in price action with volume in, flagged once that broke that high of the day of the F pattern breakout, spiked up on huge volume from about 508 up to 522 very quickly, and then this basically just rode the 13 EMA. This is actually the 3-minute intraday chart. You can use whatever interval you want, from 1 minute to 5 minute is about the intervals that I use. Basically just extending my time frames to longer. Opening, you can use 1 minute to 2 minutes, and then as the market pushes into the close, you can start using bigger intervals like 5 minutes. But the same exact pattern here. Looking at PLX, this was the same day. Broke out above the 13 EMA. It did have news, so there's two, momentum from the news. Also the F pattern broke out right there, and then continued to rip all the way up to 550s before it finally broke down the 13 EMA and had a trend reversal. But that's the perfect example of a morning F pattern breakout where you can capitalize on the first 2 hours of the day and make bank. So this one worked out. THLD didn't. But you just got to be able to identify when they're not going to work out and take that quick loss, so you don't have any significant damage to your portfolio. Anyways, that's just a quick little comparison of two F patterns, one that worked out, one that didn't, and also just showing that you need to be watching what the indexes are doing as well. What's up, everybody? It's Kim Foose. I just want to go over FBC and do a little video lesson trade review here, basically on just the logistics behind buying into a breakout and selling. So first of all, this is Foose 4 revival pattern. As you can see here, the lead-in trend is obviously bearish for FBC. It's been coming in here at a very bearish trend for quite some time. And also now finally forming up a base. It came all the way down to 45 cents. And then we began to form this consolidation here where we can basically draw these two trend lines which form into a triangle pattern. Basically all breakouts prior to them breaking out form up a triangle pattern. And that's exactly what you can see here on FBC. And yesterday, as when I actually alerted this stock and bought in here. I actually bought in at 82 cents was my initial position, which basically was this first initially spiked up around 77 cents. This is an intraday 2-minute chart here on FBC. I actually tried to buy in here at about 77 to 78 cents. I wasn't able to get my order filled, and it actually just blew up past me. But I was buying in anticipation, trying to get in around 78 cents, that it would actually break out above this neckline that you can draw here. It was actually drawn about here yesterday, connecting this line and this line together. These basically all you do when you draw a trend analysis is connecting relative highs or lows of chart patterns. But I was just hoping to see this breakout above this descending trend line, which would basically signal a breakout.
And when you see breakouts, you want to see increased volume. That typically means a lot of people are looking at this and seeing what you're seeing. You need to try to get in before everybody else, so that you have the best risk reward possibility. So I bought in here at eventually at 82 cents. Got in a little high here yesterday. Got in at 82, and it actually didn't really do much, but got a decent close for this price. And I was hoping to see that we broke out above 84 cents today, and that would be a breakout above yesterday's highs, as well as above right above this high from the past peak at 84 cents as well. So that would be pretty much an indication that this stock is ready to go, and we could see continued upside movement, and that's exactly what happened this today. This ramped up 14% after my alert yesterday. Got a confirmed breakout above this revival pattern, and you can see here this morning, right out of the gates here, this was these price action right here. This is right here this morning. This broke out on an increased volume out of the gate. I actually alerted and longed more at 84 cents because I was anticipating that this is actually going to break out and ramp up today, and that's exactly what happened. We got a pretty nice steady chart here. Looking at the 2-minute chart, you can see this forming up another intraday consolidation breakout. So, as I said before, all breakouts prior to a breakout form some sort of triangle pattern, and that's exactly what's happening here on the intraday 2-minute chart. You can see this triangle formation formed, and you have a neckline you can draw here, which would cause another breakout if that level is breached once again. And that's exactly what happened. And I actually eventually, sold at 89 cents, locking in about $2,500 gain on this trade. It's really good to be selling and taking profits when a stock is, showing a lot of strength. You're never going to sell a stock unless you're selling, or sell a stock at its peak unless you sell it on strength. The downside to that is, you might sell it early and this stock might continue to ramp up. But the benefit of that is you might just get out of that stock at its top, and it might continue to fall from there. It sucks to see a stock at its highs, then all of a sudden it comes back down and you sell at your lows. You're like, damn it, why didn't I sell at the highs? So, it's always good to be taking partial profits or your full profits when the stock is, at highs of the day or making new highs or just showing strength in general. And this actually got a nice move into the close at 91 cents. So looking forward here, this definitely has potential to continue momentum going forward. The market hasn't been or yesterday the market was down huge. Today the market was back up, so that was definitely a good thing for FBC to have an up day in the market for the momentum of this breakout going forward. And I definitely think this could head towards $1 or higher still. I locked in all my profits at 89 cents, just playing it safe here. But as a swing trade, for a perspective of the FUS4 criteria, this stock chart is definitely looking very bullish and has definitely a lot of potential to see more upside. So looking in as a second potential trade, I would be looking for a midpoint buy on the breakout candle, which would be about the midpoint of this breakout candle, around 87 cents, just guesstimating there. So this is a potential dip buy around 87-ish cents, which would you want to see a dip down to 87 cents and a move from red to green on that day would be the ideal thing there. Another example of a dip buy opportunity was XOMA today. This is off the watch list from last night. I'm not sure why this isn't loading here. Here we got Zoma loaded up here. But this was on the watch list last night as a potential dip buy near the midpoint of the breakout candle. It actually got pretty shaky here and came back down all the way to 165, but I noted on the watch list with a dip buy opportunity around the 170, mid 170s level, and this came all the way back up to 185 into the close. So it doesn't always work out that way, but when you're looking at a stock chart like this that has a huge breakout candle, and you're looking to potentially get in on a trade for a swing or a day trade, a very promising and risk-reward balanced opportunity to buy in is near the midpoint of the breakout candle. And on this stock, it's about 175-ish to 170 level there. It's never perfect. That's just basically a general range, plus or minus around the midpoint of the breakout candle. And XOMA ramped up into the close after that panic dip. And went all the way back up towards only down 1% after being down huge throughout the session. But anyways, that's just a quick video lesson on how I buy breakouts, and just remembering that you always want to be taking profits on strength, and a great opportunity to buy into a breakout stock is the following the breakout in the next day or two near the midpoint of the breakout candle. What's up, everybody? Cameron Foose here. It's Friday, January 20th, 2012. Bringing in the close of the week. We had an awesome week here. First off with KERX. I banked about $2,300 on this trade, swing trading it overnight, and then we also had a day trade into the close of yesterday. So first off, we bought in on this revival pattern here on this daily chart. You can see we got the descending trend here, as always, is the lead-in trend for a revival pattern, and then we started basing out here. And the important thing is, you always want to see that neckline to be able to be drawn. So you can see here, we were following down the trend. We got that nice little spike up with a high of 285, and then we spiked out and peaked out at 284, and then 284 once again, 2 days in a row. So then we could draw this horizontal neckline, and that's a buy trigger if that breaks out above this level. You can see here on the intraday chart, back on the 18th when this broke out. This was the daily chart on the 18th when it finally started trying to break out above that previous resistance around 284-ish. So I bought in right as this was breaking out here, hoping to see this get a nice push into the close and potentially ramp up towards 3 or higher the following session. And that's exactly what happened. Wait a second, what just happened here? All right, got my chart back here. But anyways, what I was showing here was the breakout above that resistance level on the intraday chart. And then you can see right at the morning of the next day, we got that push up above this flag pattern. So that was another signal that we were ready to push up above 3. So we ramped up right towards 3, and I took a little bit of profit here, but still held my position strong, hoping to see another move into the close. And actually ended up selling the rest of it for a nice profit of about $1,900 total throughout this rally up here. And then into the close, once again, we started ramping up once more time here, forming this triangle pattern. And I bought back in here right as we were breaking out above the 301-ish level on this intraday pattern. You can see here how this was forming up here. Then if we broke to new highs, that's another ascending triangle breakout intraday. That I was looking to sell up in the 310-ish level. So I day traded this from about 301 to 309-ish, 310, 38 were my exits on that. This is all alerted in real time on Foose TV. So you're basically on Foose TV, you're watching me just like this all day making commentary as these trades are panning out. So I locked in another couple $100, $300 on that trade, and ended up total was $2,293 in profit on KERX for those 2 trades over the period of 2 days. Now looking forward, you can see that this broke out to the upside of that first day after we bought here on this breakout candle. Locked in my profits, around the 310-ish to 308-ish level. Was my top peak sells. Then we sold off here today. So just took advantage of a short-term spike there. There's still potential for this to continue higher, but I've been pretty avid about locking in my profits lately, and I took $300 or $2,300 and moved on to the next trade, of which was CPY today for a huge move. This was the biggest gainer on the NASDAQ or any markets, I believe, today. This was on the watch list last night as a potential buy. I was actually talking about this on Foose TV yesterday. Prior to this breakout, so here's what the stock looked like at the close. Prior to this, I had mentioned that this consolidation here, we are very highly oversold on the daily chart. As you can see, we've been dropping down from about $6 per share and have just gotten hammered. It's been only a moment's time before this thing finally got some kind of squeeze and popped to the upside. So yesterday morning, we got this huge spike in volume and price action, which then led to this intraday consolidation pattern, which is basically an intraday flag. And when this breaks out to the upside, after we saw this first spike in volume, there's definitely potential to see a continuation pattern here. So right at the close yesterday, we got this big spike in volume, as well as this spike in price action, which the highs retested yesterday's high as well. So it had two spikes up to 141. So this morning, and on last night's watch list, I said, watch CPY. This is an oversold stock. If it breaks out here and gets momentum in the morning, this could definitely see a huge push up right out of the open and into the following day. And it certainly did, because this was rallied 33% today and was actually the biggest gainer in the market today out of everything. So I actually alerted along this morning on Foos TV. You also get it via email, live chat, and directly text message to your phone. Taking a long position at 140 right out of the gates. I locked in my profits at 153. Then I meant to lock in only partial at 157, and I wanted to keep a couple more shares just in case this was going to ramp up into the close of the day, and I accidentally sold my last 4,200 shares all at 157. I somehow messed it up. I wanted to keep 2,000 shares into the close to see what this could do, but unfortunately, I got rid of everything. But I did lock in $1,267 for a day trade on CPY. Several other members, made about $1,000 to $2,000 on this trade in the morning. So it's always important that you're looking at the watch list from the previous night so that you're prepared. This happened right at the morning. So if you're not at your computer waiting for this to happen, you're gonna miss the optimal entry. And for me, I wake up at about 5:45 in the morning every morning since I'm on the West Coast. So it's hard for us West Coast traders to get up every morning, be there at the open for 6:30. But if you want to make some money, you got to have that discipline to be able to wake up in the morning to be ready to trade.
What's up, everybody? It's Cameron Foos. I just wanted to go over the BSPM trade and do a little, video lesson just, on basically, just you got to be able to accept that losing is a huge part of this game. And you got to be able to just swallow your pride and say, you know what, this trade's not working out, and sell a stock for a loss and be able to do that. Because the number one rule in trading is being able to cut your loss short and move on. You can always rebuy a stock later. There's no reason to continue holding a stock as it continues to go down against you. So you just got to move on, set your stops, and stick to them, and take that loss and move on. I had pretty high hopes for BSPM. I was hoping to make over $10,000 on this trade, and that was my plan. But like I said in the video the other day, there's no guarantee over this whatsoever. I said maybe tomorrow this thing completely tanks and I sell it for a big loss. That was, I knew that could definitely happen. That was part of the risk of the trade. But that's what speculation is all about. You never know what the hell's going to happen in the future, and you can't predict the future. And that's what the stock market is trying to predict the future. And you can only speculate and, take your best shot at a trade, and but you have to be able to protect your losses and set stops. So going over the BSPM trade here, we first got this breakout above the 95% levels. Actually first initially went long at 92 cents, right about here, in expectation that this was going to break out above this neckline around 95 cents. It did do that very quickly afterwards and closed extremely strong up at 105 to 107. And the next day it actually gapped open with a high of 114. I was up $6,000 at this point on BSPM. So I was over halfway there to getting my $10,000 gain that I was shooting for. But I didn't sell it here because I was looking for a much bigger gain than this, because I know that this pattern can make much bigger moves than just going to 114, 115. So I was hoping that we'd see a dip here, pulling back to the midpoint of the breakout candle, which I talk about in the FUS4 DVD, as well as which is the support line of the neckline of the breakout. And my maximum loss, was about the 13 EMA. So we actually got at first day beyond the breakout, we got the midpoint dip. Support that came back down to the support level as well. So this was looking all right so far as we hit near the midpoint and just came back down towards the breakout support. So I was hoping to see this bounce off this level and continue to rally up from here. We actually opened up a little higher towards $1, but then quickly came back down, retested the 13 EMA, which was my breaking point pretty much. For this stock, and thankfully we got a stronger close up to 95 cents. So it's kind of a hammer candle bouncing off the 13 EMA. Definitely had potential to see this consolidate off this level and continue to new highs. And today, again, this stock has been very low liquidity since this first initial pump by Labed. We actually opened up, tapped into $1 per share for a second, but you can see here on the intraday 5-minute chart, this thing opened on 3,000 shares and then a minute later dropped on, let's see, 8.5 thousand shares down to 95 cents, and then continued down from here. And I had 30,000 shares of the stock, so trying to get rid of your 30,000 shares when this thing drops 5 cents or 5% on 8,000 shares, it's definitely a little scary. And so this started breaking down and actually got rid from about 91 to 89 cents. This is actually me selling right here. We can zoom in here. From about 91 cents to about 89 to 88 was my exit price. So you can see here this was 45,000 shares. 30,000 of that was mine. It was just breaking down. It wasn't doing what I wanted to do. Started pushing below these levels. After this candle yesterday, I wanted to see this start ramping up, and it didn't do that. It got a strong open up at towards $1 per share. So I was thinking, all right, this is it. We're going to start moving above 1. And we're going to get the ball rolling here. But that's the exact opposite what happened. And, I had high hopes for this trade. It can still, work out. If this all of a sudden gets volume in again and starts pushing back above $1 per share, there's definitely potential for this to see a continuation. But as of right now, this trade wasn't going my way. So there's no reason for me to hold on to a stock if it's not going my way. I sold this for a $2,000 loss. When I had a $6,000 gain on it. Am I mad that I didn't sell it up at 114 for a $6,000 gain? No, I'm not, because I had much more high hopes for this stock, and I was speculating that I was going to be selling it up in the 120 to 140 area. So, obviously it would be nice to have that $6,000 profit instead of a $2,000 loss, but some of my biggest gains are because I did have high hopes for the stock, and I believed in the chart pattern and let it play out rather than me, trying to just do a quick one-day scalp. But it doesn't work out every time, and that's completely fine. That's just the stock market. Every trade you go into isn't going to work out exactly as planned. But what you need to do is be able to take that loss if the stock starts going in against you. And this closed down nearly 11% today at the lows of the session. I got out in about midway through the day's decline at about 91 to 89, and we closed at 85 cents. So I'm not completely writing off BSPM as a total loss. I still think that this could find its support area down in here, start to base out, and potentially consolidate again, and maybe break out above 1, which could be another trade. And that's exact same thing that happened with AEN. I forget what this it was SYN, as they changed the ticker to. This is the exact same thing that happened with SYN. I first initially bought into this stock when it broke out above $1 per share right here, and it ramped up and failed, and had a couple of crazy days. Came all the way back down to 70, the low 70s. Actually sold it. I believe I sold this thing for a loss at first. People thought I was crazy, like, Foos, what the hell are you doing? The stock's not doing anything. And then all of a sudden, next thing you know, I went in for round 2 and made $10,000. So, a lot of people were in my chat room wondering what the hell I was doing with BSPM still. But it's because I know the chart pattern and I know that these things do and can, and I've seen it, many times over the past 7 years of trading. When their stock's around $1 per share, it's going to swing up and down, pretty wildly. But once this thing gets going above $1 per share, this thing will move very quickly, and that's when you can make a lot of money. Unfortunately, BSPM, first time around, it failed. So there might be another round here where this can go, and that's exactly what happened on AEN last time. The first time trying to buy in above $1 per share, things got really crazy. I ended up taking a loss on it. And second time around, got back in and made over $10,000 on that trade. So, BSPM, it's definitely very high risk. The liquidity is very low, as you can see here on the intraday chart. It moves up and down, down 11% today, and it's very choppy intraday action. There's not a lot of trading volume going on, especially when you have 30,000 shares like I did. So that's about it for the BSPM trade. Obviously, it didn't work out the way I wanted. I lost $2,000, but that's completely fine. I just traded Gale, Gale, from yesterday at Intei, a one-day trade. Bought in yesterday towards the close, sold this morning at the open for $2,400. So the loss is already made up for on BSPM, plus 400 just from this trade on GALE. And so, there's plenty of opportunities out there to make money. $2,000 is typically, way more than my typical loss. I try to keep my losses extremely short, but I had a fairly large position in BSPM, and it was a low liquid stock that can drop very quickly on low volume. But anyways, that's it for today's video lesson. Always remember to be setting your stops and sticking to them and taking your profits. And have a good night, and I'll see you guys soon.
What's up, everybody? It's Cameron Foose. Just want to do another quick video lesson on stock pick GALE, one that we've traded about 3 times now, maybe 4 times, but have been making a decent amount of money on this every time. I made about $2,300 to $2,500 today on it. My last trade was $2,400. I can't remember what my trade was here. My first initial trade, I think, was buying in this breakout. I'll look it up on Profitly here and post it on the blog once I post this video. But we're basically traded this for another 3rd time and 4th time today, all for successful profits. And I was able to make about $2,000 in just shy of about 4 minutes. And members were able to bank on this as well. So what I was looking at here was basically combining intraday breakout along with a daily chart breakout. So you can see here on the daily chart, I bought into this breakout this morning, for one, because on the daily chart here, we were breaking out above these previous highs of about 171, and we were gapping open. So there is automatic momentum going forward this stock because we are gapping open. And then how I gauge how to buy into a stock on a gap open is basically I'm looking at a 2-minute chart, and within the first 3 to 5 candles, if it consolidates, forms a quick resistance area. As you can see here, the highs were about 173, and as soon as that high, the small flag pattern is broken, that's a potential buy signal, and that's what I took advantage of today on GALE. I bought in at 174, alerted live on Foos TV, as well as alerting through my live chat network, as well as SMS and email to all my Foos subscribers. Basically saying buying in here, both intraday and daily breakout chart in at 174, hoping to see this push up potentially towards $2 per share. As you can see here, the highs of the day were 199. I actually got out initially. This thing just ramped up very quickly here, from about 174 up about 20 cents to a high of 194. So I took advantage of this quick day trade here. Bought in at 174, sold at about 188 was my exit price, 188 to 186 in that range, and made a quick $2,000 there. So a very quick trade, of about around 4 minutes or so, and I was able to bank $2,000. Second round This thing kind of just consolidated back and forth, topped out at about 196, and just it wasn't really doing too much here, and then consolidated again and again and again, and actually bought in here again at about let's see what my buy price was here. So I bought in here again at 187. Basically, what I was looking at here was, let's get this trend line tools out. I was basically watching this intraday triangle formation here. Still watching the 2-minute chart. And once this broke out to the upside, you could see the 13 EMA and the 50-day moving average on the 5-minute charts kind of just trading sideways along with each other. So price action was kind of going sideways along with it. And as soon as it spiked up above this resistance area, above this descending trend line with volume coming in, I took that as an opportunity to buy back in as a potential for this to ramp up towards $2 per share once again. So there was that descending trend line breakout, as well as I was watching this line here. You can see it had topped out several times at about 189. So that's another buy signal there. From a horizontal resistance standpoint, but I bought in a little bit earlier above the horizontal and bought in on the descending resistance line, as well as breaking back above the 13 EMA on increased volume with a price target of about $2 per share. I got in at 187, sold out at 197 and 196, so got in for about another 10 cents or so on this stock on 5,000 shares. So I took another $500 gain on that second position. So I had two decent trades here on GLE. Then it kind of just didn't really do much. The rest of this session just was kind of grinding back up and down. Definitely a very bullish stock still in play here. If it breaks out above $2 per share tomorrow, I could definitely see a continued run. But for now, I was very quick to take my profits. Locked in about $2,000 in about 4 to 5 minutes. This morning, and then took another very quick trade from that breakout up to resistance of about $2 for about 10 cents on 5,000 shares. So there's another $500. So anyways, that's about it, and just kind of how I look at intraday charts in addition to daily chart breakout patterns.
All right, here we are. It's Tuesday, April 3rd. I just want to take a look at a couple more intraday patterns here, some F charts. First one was DANG. This was something I had on my watch list here. We got a potential revival pattern here on the daily chart. Basically what I said on the watch list is watch out for this 840 area break, which is the neckline here. You can see as this made these past highs around, let's see, the high was 840. These highs are around 840 and 855, so about 840, and this is a buy trigger. So this was on Monday, or this is Friday's action, I guess, and this is this is what I had on the watch list for this day upcoming forward. So looking forward, I have a backtracked a couple days. The day following that I put this on my watch list, this had ended up buying or breaking out of that 840 level and going up as high as 935 on an intraday move. So there's that first initial daily FUS4 pattern there, which kind of indicated a potential move, but we're talking about intraday charts here, so let's take a look at what happened with the intraday move. So first this stock opened up, you can see here gapped open slightly. You can see here how we gapped open slightly above the previous close. And so a way to gauge how to enter this, I actually sat there and watched this stock and didn't do anything. There's a ridiculous amount of woulda shoulda trades in the stock market. This was a perfect play. I had it on the watch list, potential buy on the break at above 840. We had an F pattern, but sometimes it's just hard to click that buy button, and on this one I did not click the buy button, and unfortunately missed out on a pretty big gain here. So you can see this is the opening price here, right here, and we are on a 2-minute chart, and we had that nice consolidation here forming up this flag here this morning, the perfect about a F2 chart pattern here, and we flagged for a very short amount of time, and as soon as this broke above this flag pattern. And you can see also this was first initially halted at about 840, which was that resistance level on the daily chart. So that's kind of where the neckline was formed on this daily pattern. So that was actually the solid buy trigger there, both on the daily chart and as well as this intraday F chart pattern. So once this broke 840, that was definitely a potential buy signal. You kind of want to watch this and hope that it trends along the 13 EMA for as long as possible. And so going forward here, you can see that this ramped all the way up from about 840 all the way up to the highs of 935, within a very short amount of time before finally breaking down the 13 EMA shortly after, within a half an hour or so. And also in the mornings, a lot of the times when I make the most of my money is just buying into a morning breakout and selling on that first run up, because a lot of times that's going to be as high as the stock goes. A lot of times it might make that first run up and then consolidate and then make another move higher. That's how we make some of our biggest swing trades, because we have a little bit more patience. But in this case, going forward, kind of just consolidated and didn't really do anything. As I said, once it hits the 13 EMA, that's either just a slowdown in the trend and it might be chopping back and forth, or it could be a complete trend reversal and it comes all the way back down. In this case, it was kind of just a choppy trade throughout the rest of the session before eventually breaking back down again today. As you can see here, we kind of had this ramp up for a minute, and then now we're just kind of hanging out, consolidating. But there was that initial move here right this morning or yesterday morning to take a huge advantage of that first run up there, based on that F pattern here. As we consolidated, formed that flag, gapped open on increased volume, broke above the flag here at about 840, which is also the daily chart revival pattern breakout formation. So that was a clear, area to buy in here, and this was a perfect ramp up of nearly $1 per share in a very short amount of time, where you could actually take a huge advantage and a big profit on this, and just a small amount of time. So that was a perfect example of F chart pattern, in conjunction with a FUS4 pattern. Next up was VRNG. This was another ridiculous move from yesterday. One that was just, a little bit too crazy for me. A lot of these stocks that make these huge moves, they're making big intraday swings. So if you do enter at the wrong time, and the stock swings against you, that's going to swing hard and fast and put you in a really big losing position in a very short amount of time. But if you're on the right side of the trade, you can make a huge amount of money. Obviously there was an opportunity to make a big amount of money on this stock yesterday and today for VRNG, as I initially called this under $2 per share, and it went up as high as $4 per share. So a 100% gainer in 2 days. So you can see here on the daily chart, we kind of got this. It's a very risky stock. You can see just by the way this thing trades, there's not very much liquidity in it, as well as it's a very choppy trader. So initially first looking at this, I'm thinking, this you gotta be stupid to be buying into any of these swings, because look how crazy this thing goes up and down every day, and then all of a sudden this thing just ramps up out of nowhere on no news. So things like this do happen, but the chart pattern was there. We got this basically this perfect looking triangle formation with resistance, with a high of 214 here, a high of about 2s over here, and a high of about 219 here. So we have a clear neckline in this $2 area that was broken and just ripped to the upside once that was eventually broken. And the first initial morning breakout here, is pretty choppy, just like this stock is. It's a very inconsistent trader. We first got this first flag pattern here that broke to the upside. You can see we got that first gap open on volume, then once it broke to new highs above here, it kind of just consolidated for a little bit before making another break and run to above the $2 level. So that first initial break, things got real choppy. These patterns, a lot of times they're never going to work out perfectly like DANG did. That stock just ramped completely straight up right after it broke. A lot of times there's going to be some shakiness, especially with a stock like VRNG, where you can see in the past over here on the daily chart, this thing's all over the place. So there could have been easily the chance to get stopped out here trying to buy into this breakout, thinking like, oh, it just broke above this high. About 195, this thing could push up towards 2 and just start ripping to the upside. And it did for a second there, halted out north towards 2, came back and retested this neckline. Then the 13 EMA caught up and it kind of broke down there. So someone got a big spike, a sell spike there, but it just came right back up and started ripping up past 2. So this was definitely a difficult area to be holding through because of the volatility, and it started breaking back down below the breakout point as well as breaking down the 13 EMA. So in my eyes, that would be a sell signal. Time to get out of this stock because it's so volatile and crazy. I would probably sell for a small loss and potentially move on, or I would potentially buy back in. But this was a stock that I actually did not trade just because I was, it just looked like too risky of a trade for me. Looking at past price action behavior, it hardly ever followed through. Most rips in the stock price were basically completely sold off. So I wasn't really looking at this as a huge buying opportunity, just more of just a very high risk trade that does have potential, but a lot of the times I'm not one that's willing to take that risk. But looking further down the road here, it actually formed a late F chart pattern breakout here. First we had that first initial run in the morning, but we actually had a pretty solid intraday triangle breakout here that broke out above the highs of the day. First initially it actually had that resistance formed right here, so that was in another initial internal triangle break before it actually retested these highs here that you can draw that neckline. So the first buy signal was potentially around this trend line in the high two teens level before it actually broke out towards 230 over here. From there, this thing just completely ripped to the upside into the rest of the day, towards $3 per share into the close, and then gapped open this morning and kind of had a crazy consolidating day again. But this was all first initially based off of a daily chart pattern. This is a FUS4 revival pattern. As you can see here, incoming trend, or I guess it's kind of a flat or a force pattern, because this looks like actually the IP over here, but basically what it was a flat or no trend, then formed a triangle formation here that you can see, where you can have a clear neckline around the $2 per share, a nice ascending trend. All of a sudden it started breaking out on big volume on this day, which broke above these past 2 highs, which created a huge move to the upside and ramped up 100% in just 2 days. So that's what pretty much most of my trades start out with. I'm not just looking at an intraday chart like, oh hey, there's an F pattern, this thing's gonna rip. A lot of it has to do with what's the daily chart pattern. Is it a FUS4 pattern? After we identify a FUS4 pattern, we can use F charts to kind of help us identify entries and exits from an intraday standpoint. So VRNG was kind of just a crazy hooligan stock that ramped up 100% in one day. If we switch to the 5-minute chart, you can see that this thing completely just rode the 5-minute 13 EMA after it had that second breakout throughout the session. Let's expand this here a little bit. So looking here on the 5-minute chart pattern, this thing completely just about rode the 13 EMA on the 5-minute, just about the whole entire session. Besides these short-term dips that came down below it, as I said before, a breakdown below the 13 EMA it's either a trend reversal, or it might just be a slowdown in the trend, and that's exactly what happened here. It slightly dipped below, but didn't become a completely reversal. it basically just became a slowdown in a trend and created another F pattern, an F3 pattern that actually eventually broke out into the closing of the session, as you can see here, and then just completely rode the 13 EMA on the 5-minute chart all the way into the close. You know, it's always good to be looking at both the 2-minute and 5-minute chart patterns. You know, F1 and F2s, you know, I'm looking at, 2-minute patterns. More so into the later of the day, I start looking at 5-minute patterns because we have more of a chart to work with, and the 5-minute might be a better time frame to look at. But this is basically a perfect example of F3 pattern that broke out near the close and just completely ripped up and followed the 13 EMA the whole time. So VRNG is a awesome example of that. I think what's one more, RENN. This is another solid. This was red to green move. Let's see. So you can see here, this is the opening. Actually had a gap down on RENN, you know, and it doesn't always have to be a gap to the upside before it forms, you know, a nice little flag pattern that breaks out to the upside before it rips, you know. But this is called a red to green move when the stock opens red, and then once it crosses the green barrier and goes green on the day, you know, you call that a red to green move. But this is kind of the same morning F pattern here. The stock gapped down and consolidated, formed a clear neckline right here. A nice little triangle formation here. Broke back to the upside of the 13 EMA. We're now looking at a 2-minute chart, and as soon as this ripped to the upside of this intraday pattern, this thing just had a huge move from about 548 all the way up towards $6 per share. And you know, on the daily chart, this is actually a potential Foos survival pattern. You know, we can see that first initial spike up didn't come completely down and reverse the trend. Now we have kind of a neckline forming in this area around the 570s to 580s, and actually did break out to the upside of this survival pattern for a brief period of time, but you know, really only had this first initial spike. And you know, a lot of times it's very important to just take advantage of this first initial spike and move on. As you can see through the rest of the session, this thing just kind of completely collapsed down afterwards. What's up, guys? It's May 11th. Just want to go over a couple of the F pattern slash Foos 4 daily chart pattern breakouts that happened today that we're able to capitalize on. Not fully, but you know, we did lock in some decent profit. I left a lot of money on the table just for being too quick on jumping the gun to take the profits. But let's go ahead and take a look at these trades. First of all was YMI. This was a revival slash kind of survival pattern here. You know, the survival pattern is where you see a stock ramp up to the upside, not completely break down, then consolidate with another kind of a mini revival pattern within that, and that's exactly what happened today on YMI. So you can see this consolidation triangle period that broke out today. So we have that resistance, neckline resistance at a high of 85, 185 here on the daily chart, as well as broke above the 13 EMA today. And that was kind of the trigger there, right as that broke out above that neckline on the daily chart. On the intraday chart, this is basically YMI's intraday action right here. This is the opening price right here. So basically looking at this intraday chart, you know, we did go red to green here. We also had earnings out this morning, so you know, there was news to kind of push this thing along. So you know, having news out on a breakout chart is always the best situation possible, because when news is backing a stock, there's definitely a lot more potential for the stock to go higher, being that it has a technical perspective of bullishness as well as some kind of news to kind of hype up that breakout. But basically what happened, we kind of spiked open in the morning, but actually then got a seller in and then came back up and actually went red to green. But that's also that morning flag F pattern breakout as soon as that breaks the high a day at 185, which was also in fact the neckline breakout in yesterday's high resistance on the daily chart. So that was a great signal right there. to be going long in YMI. So I actually alerted that I went long at about 187-ish here in YMI for about 10,000 shares. I jumped the gun on taking profits a little bit early just because the market for the past week and a half has been in free fall mode. And not very many breakout patterns have been working out in our favor. Let's just take a look at the market chart here just for a second. You can see that the market has just been straight down for the past about week and a half, 2 weeks. So trading breakouts have been pretty slim. As you know, when the market's in free fall, kind of like this, as well as trading below the 13 EMA, breakouts are much more hard to come by, and the follow-throughs are going to be much less. So I've been trading breakouts through this past week and a half, and as soon as those breakouts occur, if you don't take those profits quickly, they turn around very quickly, and then you give up all or any profit you had, or you have to get out for a small loss because it's a false breakout. So today was kind of the first day in about the last week and a half where we actually had some huge follow-throughs on these stocks. So let's go back to YMI. I took my profit here about 194. You can see this kind of got a little shaky on that sell candle, but actually held the 13 EMA on the 2-minute chart pretty much all the way up towards $2 per share before kind of breaking down below it, which kind of slowed down the trend, and then we actually eventually broke down completely below it and then closed back down right around where I eventually sold. So that was a great indication of a potential trend reversal in the stock price on YMI when that 13 EMA broke down. On the 2-minute chart, you can also look at the 5-minute chart to kind of get a more longer term perspective of the 13 EMA. Kind of same thing here, but the 13 EMA on the 2-minute chart is going to be slightly below the 2-minute chart, so it's a little bit more of a lenient trend indicator. And this actually broke down at about initially right here, kind of spiked down below at 199, and then it got that complete reversal up here around 203 before breaking down. This daily chart is actually showing the stock closing up at 206, but for some reason it's a misprint. It actually closed at 193 for the intraday chart. But that's just a great example of the intraday pattern. The F pattern is breaking out, also a red to green move, plus FUS4 daily chart pattern, and kind of how to implement those together to make the best trade possible. Obviously, I jumped the gun at 194. I could have rode the 13 EMA all the way up to about $2 per share and could have basically doubled the amount of profit. I made about 700. I could have made about 1,500 to 1,400 on this trade easily if I would have just followed the 13 EMA, but I was just ensuring that I had some profit. The market's been a little shaky the past 2-3 weeks, so better than nothing. Next up was KERX. This is a revival pattern play here. Let's go back to this on today's chart. So basically what I was looking at here on KERX, we have this revival pattern. This thing has gotten hammered to the downside on this initial gap open or gap down with a neckline resistance, around 189-ish, basically kind of where the stock closed out, which was today's 189, also that high of the day of the first initial gap down. So a breakout above that level, would definitely be a potential indication of a revival pattern breakout. So basically what I was looking at here on the intraday chart, we're looking at the 2-minute chart here. Is basically this is yesterday's high of the day here from this candle here on the daily chart. You can see here the high of the day was 176, and that actually broke out above that level today. Right out of the gates this morning, actually had a nice spike up in volume. But what I bought into was this F pattern here. We got that first initial spike up, followed by consolidation, and then I was looking at this stock chart here. If we could break out above this 179 to 170 or 180 level, we had that quick spike up to 180, then came back down and spiked out up to 178 or let's see, what is that? 178. It was 178, so we spiked out at 178 twice there. Basically, it was just kind of trading this channel. If we broke to the downside of this, that was a bad news sell pressure. If we broke to the upside, the 178 to 180 level then we could definitely see a continuation to the upside. So basically, I went long at 177, trying to anticipate this breakout above 178, which would definitely potentially lead to that 180 breakout. So I went long 10,000 shares at 177, and then this thing just absolutely started to rip into the upside, up to about $2 per share. I only made about 500 bucks on this stock. I actually sold, I believe, at 182, 183, just, being a complete wussy about holding into any of the, or basically giving any patience to let these stocks play out, just because, as I said before, the last 2-3 weeks, it's been very difficult on the majority positions to have any patience, because if you need to be taking profits very quickly, or you'll be getting stuck in a break-even position, or get stopped out. So I was taking some good profit there. Unfortunately, I could have made almost 2,500 bucks on this. Instead, I only made about 500. But that's better than nothing. I was able to take advantage of this F pattern opportunity that was also combined with this revival pattern breakout. Looking on the FUS4 daily chart. So this was just a great example again of combining the F patterns along with the daily bullish chart. And same thing here goes with the 13 EMA. You can see this thing broke out above this flag pattern, above that 180 level, which was basically the high of the day. Breakout there of that channel. I initially bought into that slightly lower spot, trying to anticipate that 180 breakout at 177. As you can see, this spiked out twice at 178, just below that high. So I was anticipating that to be breaking out above that high of day 180 consolidation. And then this basically just rode the 13 EMA all the way up towards about 195. Spiked out to 201, which is obviously going to be a great profit target because it's a whole number, as I talk about in the initial FUS4 pattern, or FUS4 DVD, about how important whole numbers are as profit targets. And that was the same thing with YMI actually as well. That spiked out at about $2 per share as well, up to 208, and then came back down to 193 into the close for YMI. So, buying into this survival slash revival pattern, spiked out towards 206 to the $2 range. It's not always perfect. It's going to be give or take that general area. Then came back down to 193 on YMI. So always be looking to take profits near hold numbers, as that's usually an area where a stock will peak out, and that's exactly what happened here with Kirk's as well. I rode the 13 EMA. As soon as that broke, it didn't actually completely reverse, but usually a breakdown of the 13 EMA typically means a reversal in trend, or possibly just kind of a flat trading zone. And that's kind of what happened here with KERX. Once it broke that 13 EMA, we can also take a look at the 5-minute chart on this. This just kind of rode the 13 EMA on the 5-minute all the way up to about 197-ish before finally breaking down. So definitely, two perfect examples of using the 13 EMAs on the intraday charts to kind of gauge the intraday tops on these FUS4 daily chart patterns, but also looking at the intraday F patterns to find entries on those stocks. And then a couple more I wanted to talk about was REX. This was a bit of a wild one today. You can see here this kind of had this also survival pattern breakout, came back down, had that spikes out up near 367-ish. So that was kind of the neckline breakout zone on the daily chart, as well as that breaking above the 13 EMA on the daily. But over here on the intraday chart, we're at the 2-minute pattern here. That got that initial morning F pattern flag break right here. That was pretty perfect. After this broke above that high of the day on that flag pattern at 366 on this gap open, then ran up about 20 cents to a high of 384, so it was about 18 cents. Good opportunity to be locking in some profit there on that quick morning scalp, just to make some quick bucks. For this one, this didn't, that had that about 20-cent spike, so this is kind of a situation where taking those quick scalp profits is important, because this came all the way back down, retested that 13 EMA on the 2-minute chart, and actually broke down the actual breakout point, which is a pretty big sell signal. But then OREX was kind of all over the place today, and just kind of consolidated and consolidated and consolidated, and actually formed a late stage F pattern when it broke out above these highs of the day on this other consolidation triangle pattern here. So this is another additional F pattern formed intraday, a late stage one towards the end of the session, and actually had a very strong close above, rallying as high as 424. So a great example of these stocks are very volatile right now, and there's multiple opportunities if you can take advantage of them. We had that first initial F1 pattern breakout that you could have scalped for 20 cents, and then this had that secondary late stage F pattern when this broke out above highs of the day again right here at about just below 385, which led to a rally up to highs near 425. And so basically, this thing on the 2-minute chart was kind of pretty choppy throughout the 13 EMA. Actually, on this late stage F pattern, it was pretty on point with that 13 EMA here. But let's take a look at the 5-minute chart. So looking at this actually kind of rode the 13 EMA the whole day along the 5-minute chart. So it's good to look at both 5-minute and 2-minute charts to kind of get a feel of how the stock is trading along that trend line. And this finally actually broke down below the 13 EMA right at the close. Next up was OREX, or RPRX. We just looked at OREX. This was a pretty big red to green move today. So you can see here on the daily chart, it's not necessarily a FUS4 pattern. It just had a huge move yesterday that ramped up, and then a huge secondary move today, up 42%. So let's take a look at the morning chart pattern here. The red to green move is basically the stock moving up above the yellow line. This is TC2000. So basically it sold off in the morning, had that consolidation flag. Once that broke above yesterday's highs, or yesterday's close, that was a pretty big buy indication. And looking at the 2-minute chart, this ramped all the way up to the 13 EMA from 550-ish, breaking down the 13 EMA at around the 620s. And then secondary breakout pattern here on RPRX when it broke highs of the day again, rode the 13 EMA one more time, and this thing just absolutely ripped, actually forming third and final F pattern into the close again. So crazy day for RPX. Lots of these breakout patterns here going on for the F pattern. So definitely something to watch out is for those red degree patterns. Also big moves on intraday F patterns on stocks that have a lot of momentum.